Now to the US, where new unemployment claims have risen for the first time since April to more than 400,000 last week. That's despite a record number of job openings in the world's largest economy. US policymakers are facing a strange new problem: how to coax people back to work. As Kyoko Gasha reports from New York, businesses say enhanced federal unemployment benefits are making it hard to fill open positions.
A sunny day means a busy lunch at Sarafina on Manhattan's Upper West Side. But for manager Nick Granato, it's not all business as usual.
It's been hard to fill positions in the front of the house, like servers, bussers, bartenders, hosts. We've been short-staffed a few nights, when we're really busy and we just don't have the manpower to man the floor.
As businesses reopen to full capacity, staffing up is proving to be a challenge, especially in the service sector, which was hardest hit by pandemic lockdowns.
64% of our small businesses here in Brooklyn indicated that they were having trouble getting their employees back or finding employees. And that was kind of a little bit unexpected.
While the national unemployment rate has fallen from the highs it hit last year, it remains well above pre-pandemic levels at 5.8%. Today, about 9.3 million Americans are out of work.
That's the exact amount of unfilled jobs listed in April, according to the Bureau of Labor Statistics. What's keeping workers on the sidelines? Employers point to lack of childcare, insufficient hours offered, and above all, unemployment benefits increased by the federal government.
We still obviously have issues related to vaccination and people being confident about going back to work. But I think at this point we've sort of pivoted to a new stage, which is we still have people receiving unemployment benefits that are at a level that are higher than the jobs they gave up.
A restaurant worker makes on average around $300 to $400 a week, according to the U.S. Private Sector Job Quality Index. But enhanced federal and state unemployment benefits can total as much as $750. For many, it's simply not worth going back.
We do have people who were in jobs that, quite frankly, were very low-wage, low-hour jobs prior to the pandemic, and those are the jobs that are mostly remaining unfilled.
To draw people back into the labor force, some states and businesses are offering cash bonuses for people who return to work. And about 25 states are planning to cut off the enhanced unemployment benefits early, before they expire on September 6th. As that date approaches, economists and employers expect U.S. job growth to accelerate.
I think things will change. I already see things are getting better. More people are comfortable coming out, so I think more people will be comfortable working. And hopefully by the end of the summer, there's some kind of normalcy.
But that may be optimistic. A recent U.S. Chamber of Commerce survey of unemployed Americans found that 61% are in no hurry to go back to work, and 30% do not expect to return to the labor force this year. Kyoko Gasha, TLT World, New York.
Let's get more analysis on this from Art Hogan in New York. He's Chief Market Strategist at National Securities Corporation. Welcome to the show. Now, as we heard in the report there, more than 9 million people out of work, a similar number of jobs available, and yet people are not willing to take them. Is this just because of these government handouts, or is there more to this story?
Oh, there's certainly more to this story. I think there's a combination of things. I think you have to look at people feeling comfortable getting out, right? So that's the continuation of getting more vaccines into people's arms. I think it's one piece of the puzzle. There's certainly a number of people that depend on school being in session, students going to school in session to be able to join the workforce, daycare centers being open and available. So childcare is another issue that hopefully is getting better throughout the course of the summer. And as kids go back to school in person in the fall, that'll help. I think the third thing that doesn't get talked about as much is, especially in the service sectors, people decided to start their own businesses. So while companies and restaurants and stores are reopening, there are a lot of folks that ventured out onto their own in an entrepreneurial fashion and created their own businesses. So that's taking away from those folks that would have returned to what they were doing before. So add all those things together and then combine that with the fact that we have extended unemployment benefits that don't run out until September, you're likely going to not see the kind of jobs creation that we'd like to see on a monthly basis until we get into the fall.
It makes sense, right? People don't want to have those kind of jobs where they interact with a lot of people directly. Now, we've seen the Federal Reserve say, or signal rather, that it may be tapering off that bond buying program. And then later on, of course, we're expecting higher interest rates. Do you think that's going to slow down some businesses and possibly even hit that jobs number or the number of vacancies available down the road?
No, you know what the Fed is really messaging is that at some juncture, at some point in time, and that point in time is down the road a bit, they won't need the emergency type monetary policy that they've had. So they're purchasing $120 billion a month of fixed income assets. About a third of those are mortgage backs. The other thing is that they've got interest rates at 0 to 25 basis points. That's emergency levels. So what had happened at the meeting yesterday was that they're starting to talking about tapering, which means it likely doesn't start until the end of the year or next year. And I don't think that's going to have a massive effect. As a matter of fact, I think the market had already priced in that kind of timing. The other thing that changed was they look like they may be able to raise rates a couple of times in 2023. So that's 2 years from now, right? So I don't think there's going to be a near-term or a medium-term negative effect on the economy. As a matter of fact, they're doing this if, in fact, they get to significant improvement on what they'd like to see, and that's more people getting back to work. So they're really focusing on the labor side of their two mandates, full employment. And as they make substantial progress towards that goal, I think they'll start reining in some of the monetary policy support. But we're really talking about pretty far down the road. I don't think there's going to be a near-term impact whatsoever.
Okay, and the other big story we have to ask you about before we let you go, of course, is the Supreme Court dismissing a challenge against Obamacare. Does this provide more cushion to families that have been hurting economically and health-wise during the pandemic? And then also, how does this impact the government's liabilities?
Well, yeah, very good news for the Affordable Care Act, and clearly 20 million Americans depend on that for their health care. We'd like to see that expand. That's certainly not universal health care, but it's certainly an option for people that need health care. We'd like to see that grow in the future, but I think it's a significant message from the Supreme Court that Affordable Care Act is here to stay, and I think that's very important for Americans that don't have access to health care.
All right, Art Hogan, thank you so much for your analysis on the show.